Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Markets are watching for any outcome from the talks between Iran and the U.S. on Friday, weighing the risk of military action against the OPEC producer. To discuss market sentiment, I'm joined by Ozan Askarol, founder and managing partner of Tanto Capital Partners. Ozan, good to talk to you. Yesterday, President Trump saying Iran needs to be very worried. How dangerous do you think the situation is right now?
I think it's de-escalating to a certain level, and I think it is for the benefit of the region for Iran to lose its nuclear program. So I don't see this progress as a negative per se, but the execution risk is there. So, talks have moved from being in Turkey to Oman right now, but will it yield anything meaningful, and will that mean something meaningful for the public of Iran is a question that...
Do you really believe that there's going to be a deal done, though? Because most people I talk to are very skeptical.
Look, let's define what a deal looks like, and let's not forget that almost a decade back, there was a deal called JCPOA, Joint Plan of Comprehensive Action, and that was ripped apart. So if this is going to be some sort of a renewed JCPOA that has Iran's uranium enrichment program under control, that is a positive for the region. Now, how you execute that is the question that no one has an answer to right now, but I think conversations, Jumana, are better than non-conversations. So at least there is a series of talks that are going forward right now, and let's see how that plays out. But if it plays out in the way that Trump administration hopes to, it's a net benefit for the region. Okay,
interesting. So it's sort of a positive spin on it versus, say, other people that I've been speaking to. But at the same time, if you look at the main risk indicator, we look at oil, and the reason there's so much geopolitical premium right now in oil is because of the Iran premium. Do you think that where we are right now is reflective of some of the risks?
Look, vis-a-vis commodity prices, base metals, precious metals, AI stocks in general, the reality is that investors are finding it challenging to price all of the collective risks that we are looking at right now at this current macro backdrop. So Iran and the conversations around Iran, the reason why I'm putting a positive spin is that having a conversation to de-escalate the situation is a positive in my view. Now, it doesn't take away from the fact that we're going to have to deal with a number of different cases around the world. Oil markets are going to be basically quite susceptible to shocks around geopolitics, as was the case in Venezuela, as it is now in Iran, and potentially what happens in Russia, Ukraine, going forward. And so to me, it's not a short-term negative, provided that the conversations yield something that is tangible.
When we talk about geopolitical risks, it's always in the context of something negative happening.
That's
but
right.
What about pricing in a positive tail risk? So a positive outcome for Iran, an actual resolution to the Ukraine-Russia talks that are taking place, by the way, here in the UAE. I mean, perhaps investors are not thinking about the positive outcomes that could be yielded as well.
There's so much noise in the market that it's very difficult to focus on the positive just because we have to price a broader set of risks as investors, which we are finding challenging to do across the board. Having said that, from a geopolitical stance, I think Russia-Ukraine is a much more challenging issue to overcome, whereas if a deal gets agreed with Iran, again, it's an assumption, it will be beneficial for GCC, for capital coming into the GCC. So I see the conversations as a positive. Again, we'll see what it yields. I think Russia-Ukraine is more challenging, though.
Yeah, it is. It is for sure. And it's been going on for 4 years now, which is shocking to me. Let's just take a step back and look at the markets, because you have the geopolitics, a lot of headlines coming through from geopolitics, but actually the big market driver the last couple of days has been this route that we've been talking about in tech. About $1 trillion worth of market cap has been wiped off the market. Perhaps that is the bigger risk for investors looking ahead, and the hype around a lot of these stocks that people were really excited about last year.
Look, have you noticed, and we have all noticed effectively, that our reaction, the investor reaction to news, especially adverse news, is way more significant and volatile or vicious than it really needs to be. And I think there are a number of reasons for that, and one of which is going to be the escalating cost of debt, long-term debt in particular, what it means for cost of debt, cost of capital. So investors trying to understand, for example, we talked about the Alphabet's, CapEx investments, 185 billion, dollars. Actually, if they can fund it, This should be a positive.
Yeah.
The question is, can they fund it? If they're going to go to the debt markets, what does it mean?
Well, they're sitting on a cash pile of $120 billion. So in that case, you have to look at the numbers. It's different for, say, the likes of Oracle, for example.
Absolutely.
Yeah.
So can investors differentiate? They should. But market reaction is also about the momentum trade, and it is driven by fear more than hope, as it generally is. One thing I would say, Jumana, though, I think we need to watch the Japanese debt auctions more carefully. I mean, they just came out with a 30-year, which actually went better than people thought it would. But still, yields remain elevated. They will continue to remain elevated, which, again, to my mind, means that investors will have to take a look at what the cost of capital will be for certain companies and price them accordingly. The problem is we're not going to be in any shortage of news flow coming our way.
Yeah.
Our reaction to these sayers of news flows can't be so volatile. That's the issue.
So where do you put your money? In defensives, in value, in safe havens?
I think it's a portfolio, and the answer to that question is invest in things that you do understand to a certain extent. But I think in a market like this, with a backdrop like this, I mean, am I going to bet on AI? Yes, I'm going to bet on AI because I think our society is going to need more of this. Am I going to bet on data centers? Yes, I will. But if I'm betting on these things, I also want to bet on the energy infrastructure of these things.
Yeah.
So focusing on areas that will complement this. But then there are fundamental, more thematic areas like water security, food security, that also I think are areas that we will have to talk about going forward. So it's a basket case.
Yeah. Ozan, thank you so much. Thanks for coming on the show. Ozan Özkural, the founder and